By the end of the year, I think Nvidia can reach $500. I see an obvious way to get there, but it's a bold call. So, you're still optimistic about the market as a whole following a week in which we had guidance from ARM, Western Digital, and now Intel and Microchip. Oh, no. It's a smaller group because I'm confident in businesses that are assisting Nvidia or truly focused on the GPU. Look, during the Amazon conference call, they stated that they are aware that they must invest in AI, to the extent that Nvidia is completely sold out. They are likely to remain sold out until 2025. Nobody is any less convinced that Nvidia will continue to be the main benefactor despite the spending commitments that Microsoft, Meta, Alphabet, and Amazon have confirmed. The market is now experiencing a bid rotation. Consumer concerns and whether the Fed is now lagging behind are present, but none of that seems to get to the crux of the issue. Nvidia will probably be sold out for a while. They have to make their own chips if you listen to Amazon, but that's a defensive tactic since they can't obtain enough. This is my opinion about Amazon. Even if the stock is down today, I would still buy it. Amazon is purchasing aircraft and erecting hangars because they are aware of the high volume of business. When purchasing a large number of planes, you do not immediately place people on them. Instead, you purchase them first, incurring costs, and then wager that they are correct. An alternative parallel would be that they are purchasing a Stradivarius, which is not something that can be learned like a violin. Both learning and teaching are more difficult. They can't immediately flick a switch, and that's disturbing people. I'm using analogies to illustrate that it takes time. People said, "Are you kidding?" when the Olympics were mentioned. The nation is in 2012 mode, watching the Olympics and making fewer purchases. Clients are phoning to inquire about possible delays in Blackwell, per to Jeff's letter, and there was a story that the DOJ was contacting Nvidia's rivals who had been complaining. They never stated that it will ship in large quantities at this time, but it is slower. Jensen never stated that it will ship in bulk anymore, so people ought to go back and ask him. The question of return on invested capital remains, but the hyperscalers have consistently responded with yes, and Jensen agreed. Do you recall Zuckerberg's discussion of generative AI? According to Jassy, it will grow rapidly and be primarily developed in the cloud from the beginning, enabling those companies to continue expanding. There isn't a break for the cloud. We should concentrate on that instead of the people who decide how to allocate capital. Just one thing, please. If you were upset with me, I apologize. It's a huge day, so I became a little excited. I'm sorry about that. The story of the AI revolution remains intact. Despite the white knuckles in the market, our checks indicate that now is not the time to worry. Elliott Management recently advised investors that Nvidia is in a bubble and that AI technology is overhyped, with reality not living up to the hype according to the Financial Times. I completely disagree. We discussed it before to results and conference calls. Have a look at the Azure acceleration and Lisa Su's remarks from AMD. Although the second half guidance suggests modernization, we found Azure's acceleration guidance to be underwhelming. It's easy to yell fire at a packed theater these days, even when the bears have been there for years. We perceive value that matches the hype, so we don't see that. I believe the street is underestimating the trillions of dollars that will probably be spent on AI capital projects across all tech companies over the next 3 to 4 years. Nothing we've seen here altered that opinion. As you say, none of them are abandoning their capital expenditure plans. In fact, AWS increased sales growth by 19%. Return on investment over time is still a bigger concern, but I think it will happen. Short-term uses are starting to appear in retail, insurance, healthcare, and finance. The modernization phase has begun, and we're only getting started thanks to contributions from people like Sundar and Nadella. We'll reevaluate in January or February if we don't observe software monetization or wider acceptance outside of the Magnificent Seven, or second, third, and fourth derivatives. But for the time being, what we're witnessing, not just in profits, but also in our checks, has given me more confidence. I've never seen anything bad about Bill McDermott, and if he, Sue, Nadella, or Cook see something, I'll believe them more than people who are stoking the flames. This is the golden ticket to tech prosperity. Nvidia is on fire. Everything is being revolutionized by AI. Nvidia is the force behind it all. I'm living up to my rhetoric with these revenues. Get your Nvidia keychain now for less than $10. We're offering a huge discount for the first 100 purchases. Our investment committee members are taking action. Now, Rob Sin joins us. You owned a number of tech brands, but not Nvidia, Rob. Why did you purchase it now? We looked at our portfolio, which is benchmarked against the Russell 1000 growth, and found that, mostly because we didn't own Nvidia, our average stock was up 15%, while the index was up 21%. We therefore saw an opportunity yesterday after being underweight on Nvidia. Despite having high P/E ratios, stocks such as O'Reilly shown decreasing growth. In order to improve quality, decrease our tech underweight, and match our portfolio with earnings in the upcoming weeks, we transferred that money to Nvidia. Since we continue to believe that there is a short-term danger of market panic, we did not acquire a complete position. However, volatility brings possibilities. In order to close out lengthier holdings, we'd have also modified our duration. If you're ready for it, volatility might present possibilities, as Rick Reeder said. Get your Nvidia keychain now for less than $10. We're giving the first 100 orders a huge discount. Yes, here is an extension of the script in the same style. Nvidia's momentum is a component of a larger technological revolution that is occurring in a number of industries. Even in the face of market instability, the major players, Amazon, Microsoft, Meta, and Alphabet, have all doubled down on their AI budgets. Nvidia is at the heart of this, serving as the foundation of the AI infrastructure that these businesses depend on in addition to being a provider. These hyperscalers view Nvidia as crucial to carrying out their plans, and they're not simply meeting a need. They're establishing the benchmark for an entirely new generation of AI capabilities. Therefore, I believe it's obvious when people ask if the hype surrounding AI is in line with reality. Demand signals, spending, and adoption are all pointing in the same way. Some investors are now uneasy because they doubt AI will yield a profit. In actuality, however, investing in AI creates long-term competitive advantage rather than merely being a cost. AI is being rapidly used by businesses in a variety of industries, including healthcare, banking, and insurance, in addition to the tech sector. AI is improving every aspect of this ecosystem, including automating processes, improving predictive analytics, and updating workflows. Nvidia is located directly at that junction, and the spending pledges we're witnessing provide assurance that this isn't just hype. It's a development of the core principles of how businesses function. Take a look at Amazon's recent actions. Some may view their significant investment in developing their own AI infrastructure as a competitive strategy. But in reality, it draws attention to the lack of supply in the industry. There aren't enough Nvidia GPUs to go around, so Amazon is creating its own as a backup. Don't be misled though, their primary AI initiatives still primarily rely on Nvidia. It is by necessity a cooperation, and you can know that this is a persistent, deeply ingrained desire that isn't going away when you see other businesses doing the same. From the standpoint of portfolio management, this is problematic. Nvidia's supremacy puts the conventional diversification concept to the test for those of us benchmarking against indices such as the Russell 1000 growth. It's one of the few times when the performance of a single stock has enough weight to cause a sizable reallocation of the portfolio. Rob Sin discussed this change, moving from defensive roles like O'Reilly to growth-oriented ones like Nvidia. That was a well-considered change based on Nvidia's potential for superior performance. Reducing tracking error and reallocating into better tech positions is about planning for future profits in a growing industry, not about following the latest trends. The issue of more general market dynamics comes next. Macro factors like interest rates, bond movements, and job data all cause market turbulence, but their effects are usually fleeting. More intriguing, and frequently disregarded, is how businesses are handling similar difficulties on a smaller scale. For instance, despite ongoing financial challenges, Nvidia is always inventing, introducing new processors, growing its ecosystem, and figuring out how to satisfy the company's skyrocketing demand. Despite the high stakes they operate under, they are demonstrating resilience, which is boosting investor confidence.